Good afternoon, everyone, and welcome to today's Trading the US Open Live here at the LiveTradeRoom. And today is Tuesday, the 9th of October. Just to give you a very brief, concise introduction to what this session or what you can expect in this session. We're real traders trading live capital in these financial markets, and what we look to do is to identify high probability trading opportunities that we'll be looking at for the session ahead. So we'll go through a bit of a process in terms of being able to execute these trades and of course manage them as well with a high degree of consistency and discipline in our approach. And these are the skills we think are very necessary for all profitable traders, with one aim, and that's to book in consistent returns and profit. So what we look to do is to look to cut or lose a short, so we always trade the financial markets with stop losses. We've been generally, over the last 7 or 8 weeks, we've been keeping those stop losses very tight on purpose, and we're beginning to get some direction kicking into these markets. So we are hopeful that market conditions might start to improve a little bit, which is obviously very important. Doesn't matter what type of trading strategy you adopt. Before we begin, if we could start with our risk warning, of course, just please do take a brief moment to familiarize yourself with the risk warning currently up on the screen. Okay, so before we begin then, let's do a quick review of potential market moving news. So this is very important for traders to understand the news flow. And this is going to be a very quick one, purely because we, of course, do not have an awful lot of news to have to deal with today. Now there is macro events, there is events which are impacting these markets on a regular basis, and just to touch upon a few, global trade wars between the US and China can have big impact on the equities and global growth. Brexit negotiations between the Eurozone and the UK, sanctions on Iran, geopolitical concerns within Europe as well. So all of these factors, concerns, the fiscal concerns with Italy, and basically Europe's response to that and the impact that that's having on Greek banks. So a lot of turmoil out there, so we're likely to see some volatility creeping in for those reasons as well. Okay, so that's a little bit of an overview of the news, not an awful lot to really contend with ourselves. And one of the moves we were looking at was a break below the 14.59 in the euro dollar, and we got that break kind of over an hour ago, just before the US trading session. So so that was the and let me go back to the daily time frame just so you can see where we're at with this. So we've had a really strong explosive move lower, actually just very recently. So we can absolutely add that it was one of the trades that we were looking at this morning, but as you can see, we had a bit of a pullback and just literally moved sideways for the majority of the session. So just a little bit unfortunate in terms of a timing perspective. We got a little impulse lower and then that went sideways for another few more hours. So we're now down at these lows, the 14.33, so we've obviously got to adapt. We've got to understand what's come before these trades, and that's going to formulate a part of our decision making. So this is the euro dollar. We have this thrust to the downside, so we'll come back to this because what we'd be looking for is a little bit of a pullback and maybe look to sell this market at a slightly higher price. We eventually got this rollover to the downside. We saw like a 1 minute sort of devaluation down to the 30.49, and then we saw for the majority of the morning just the market just pulling back a little bit, but we've had this new flush to the downside. We can absolutely take note of these lows, and there is probably more important lows just below that level. So we're in the area of potential support, so do bear that in mind on a 15-minute time frame. So if we get a break of those levels, that will be a structural failure to the downside, and we'd be looking for opportunities to sell below the 30.26. So looking at this on a daily time frame, you can see the potential for this trade to roll over to the downside. and it would be a break as well against the daily low. So potentially a couple of good opportunities there. And we were looking at these trades this morning, but we unfortunately didn't get the opportunity to trade them. Not much going on with the dollar yen, so perhaps we could move swiftly on with that one for now. We're seeing the dollar strengthen against the Swiss. The 99.53 level was, over the last few days, is quite an important level. It's also the weekly high. It's last Friday's high. So a break above that could be in continuation, but if I just zoom out a little bit, you can see that there's potential resistance just at this level. So again, we can reserve a little bit of judgment with a few of these markets. Same situation for the dollar CAD. The dollar's strengthening against the CAD, and actually has more potential to the downside if the dollar ever starts to weaken, or when the dollar starts to weaken. So we've got a plan for both occasions as things currently stand. So if the dollar starts to weaken, we've definitely got opportunities in the dollar Swiss and the dollar CAD, and if the dollar strengthens, we're likely to see good opportunities in the euro dollar, the pound dollar, the Aussie dollar, and the New Zealand. So we're kind of splitting the camp a little bit based on recent price action. We do like these markets lower, but we are going to prioritize and just focus a little bit more on the euro and the pound. So it's just choice, really. The euro pound, as you can see, we've had a bit of a strong pullback that has subsequently. So we were looking to sell this market earlier today, and we have seen the rollover to the downside. So we got in at this breakout around the 87.69. As you can see, a really strong pullback, potentially related to some news events. And what we've seen subsequently, I suppose, in line with Dominic Raab, who's been giving a statement regarding the UK's position on Brexit. We've seen a little bit of selling, or should I say a little bit of pound strength creep back into the euro pound. But we're just experiencing a lot of volatility with it. That's the problem. So yes, we do like this market below the 87.69, but do be mindful that it is sort of quite choppy. So I think there's probably higher probability trades that we can focus on without the choppy environment for it. So we'll have a look at this, even though it's quite a strong continuation to the downside now. So the yen has strengthened against the pound, even more so now against the euro. So it's the euro that's been selling off quite significantly. And if I just bring this up on screen, we can see really that there's a bit of a kind of a channel forming, pushing prices higher. And now we've had a nice constructive break, and now we're back in below this descending level, and we're currently trading below this. So we do have the 129.21 level that could provide a little bit of support. But we do like this market to the downside, especially if some more strength starts to creep into the yen. What we'll do is we'll focus on the euro dollar and the pound dollar to the downside, just because they're giving us slightly better quality trade setups. We're already in the gold market to the downside. We'd expect continuation, and we're slowly getting it. But I suppose slowly is the operative word here in this situation. So a break below the 1180 level, actually just a little bit lower, would constitute a structural failure to the downside, and we're likely to see prices push down to 1160 if that's the case. US oil, we have seen the flush to the upside. We were looking for opportunities to buy this market, saw structural failure to the downside, decided to sort of back off for the latter part of the European Open, and we saw a nice push to the upside before we got the pullback, and now a structural failure back to the downside. So we do like the idea of the oil market moving higher from this level. We're just experiencing a significant amount of volatility in it. And not much is really happening in the Brent oil either. So it just implies that there's a little bit more opportunity for sellers to start kicking in and start driving these prices back to the downside. A trade that we're already in fact, what we can do now, we can see that we've had this extension to the downside. This is exactly what we were looking to see. That's exactly what we were looking to trade, should I say. And we're likely to see these prices just squeeze a little bit lower down to the 28.60 level. Let's see if we get that opportunity over the course of this trading session. So we like the full nature of this market. We will look to take profit just at these lower levels, maybe around the 28, 63, 64 level. So that would be a natural area for us to take profit. And then maybe look to get into it again if we get a break below this low sitting in here, the 28.60. So so going into this market on a 15-minute time frame, we're seeing the nice coordinated move to the downside, and we've already mitigated risk on the trade, so we can go ahead and break even on this trade now. So we'll take the high, which is the 28.78, and we'll book in a small bit of profit on this trade, 28.79. So just a 4 pip profit on that one. And what we want to see is this market extend to the downside. It has all the potential to do it. So you can see the pattern that's been created. Wherever this pullback may end, what you want it to do is for that to create a structural high, and we want to see lower lows. So we want to see this market break below the 28.70 level. It has all the possibility to do that, at which point we can then book in more profit on this trade. So this is just effective trade management. We've taken risk off the table, so this is a risk-free trade with the potential for this market to maybe move down to the mid 28.60s, somewhere down at these lower prices. So we just got to manage this trade effectively now, and with consistency, and it might get to the point where we're just probably a little bit more interested in taking profit. Certainly if we attack these lows again and we start moving sideways for long periods, we might just say, right, we'll just take profit at these lower levels. So hopefully we'll get the next flush lower there. The stocks, the US equities are all continuing to move lower, so that really supports our sell trade in the S&P. We've seen our break to the downside. There was our break below the 72.30.93 level. So let me zoom in. And the new level became the 72.20 level. So that was the all-important level for us to see if we could capitalize on an opportunity. Now, in the latter part of the European morning session, we've seen a little bit of a flush lower. So just over the last hour and a half or so, but we've had the move lower, we've had a strong pullback, and then we've had the extension to the downside. So if you didn't capitalize on the actual breakout trade just in here and place a stop loss just above these highs, you could have waited for the pullback trade and maybe look to sell it from that particular level. So it became a very good opportunity to get into the market. Wasn't at my trading desk at that point, so we've obviously missed the flush to the downside. And of course, that's an occupational hazard for traders as well, because don't get frustrated about missing opportunities, because you generally get other opportunities fairly swiftly. And it is a part of the psychology that a trader needs to adopt as well. So, so do bear that in mind. Obviously, if you're not aware of the market movement, we can't watch these markets 24 hours a day, and we certainly don't recommend you to put anything like that kind of time into trading. You obviously need the markets to move in your favor when you're at your trading desk, and that's why we look at 18 sort of liquid global markets, and you often get opportunities in one if not in the other. So it does make it possible to trade these markets at a multitude of different times. Okay, so what we need to see now in the FTSE market is a bit of a pullback. So we know these markets don't move in a linear fashion, so when we get that pullback, we look to get into it at a slightly higher price. So we need to be a little bit patient on this one. And we've seen the extension in the Euro stocks. So the trade idea for the stock markets to continue to squeeze lower is a very good one. A little bit difficult from a trader's perspective to sort of navigate and get into them. We know we want to get into them. Looking for those opportunities is a little bit harder for some reason right now. Sometimes they're kind of straightforward. They all stack up, they all align, and you can get into multiple trades very swiftly, easily, mitigate risk pretty quickly. But definitely market conditions are a little bit more challenging as we look at these markets. So we'll continue to look at the FTSE market to the downside. So we do want to see a nice pullback on this, so we'll keep a close eye on that one. US oil, I think we'll actually look at the S&P 500 just in here. Okay, so bottom right hand corner of the FTSE. Again, what we'd like to see is an opportunity to for a high to be created in this market, and see if we get a little rollover to the downside. And if so, we might even add to this trade. We might even we're already in a small bit of profit on this trade, so if we get a nice tailored pullback, it might give us the opportunity to get into it to the downside. So we can wait. We need to be a little bit patient now with these trades. Top left, we'll look at the euro dollar. So we really do like this market lower, and it looks like we're getting a bit of an impulsive move to the downside. You see, we've got a little bit of air beneath this level now, so there's no reason why we don't get continuation. So for that, it might be worthwhile getting into it. If we get a confirmed break below this level, just sitting in here, which is exactly the level that this market has now bounced off. And we have the benefit to place a really relatively tight stop loss. So if we get in just below the 1432 level, we could place our stop just above the 1442. So we might get into the breakout on this occasion and see if we get some more selling creeping in to the euro dollar. And we're at this point now, so we might as well stick with this trade and see if we get that close below the 1432. That's the consistent element behind our entries. So when you identify your level, you obviously need to have a little bit of confirmation that you would ordinarily need, and that can be different things for different traders. For us, it's a close below that particular level, the 1432, and what it can often do is just protect you from. So because we didn't get the close, we can wait for that close, and we protect ourselves against sort of price action like that more often than not. Not always the case. Sometimes we get the close below the level and then we get the turnaround. So that is technically a false breakout. So that can give you more information actually to a reversal signal and can potentially give you some opportunities to buy these markets as well. So all of these different facets and aspects to trading these markets can they're all sort of nuances and the way that price moves. And as you can see up on screen, it's about becoming a master of price action. So it's understanding what markets are doing, what sort of trade conditions are we needing to trade, and navigating those conditions as best we can. So that's the euro dollar. So we've had a little bit of a bounce off that now, so we can take our time getting into it. It was only if we got a close below that 1432. So the other market that we're quite interested in to the downside is a kind of a similar kind of setup really. So we're really testing as to whether we're going to see a little bit more dollar strength start to creep in. If that's the case, we'll look to sell the euro dollar below the 14.32 level. We'll look to get in to the pound dollar below the 30.33, and we do have easy to identify stop losses. So the range in this is about 22 pips, maybe something like that, but the range in the euro dollar will be much less. So we average about 15 pips exposure to our trades at the moment, depending on the trade entry. We're looking for potentially an opportunity to sell at these highs up here if we get that opportunity. So currently we're getting that bit of a move, and we can probably work with a level sort of in and around here as well. So maybe capitalize on a move in and around this price point. The reason why I've identified that particular level is just to say, right, we're in a downward moving market. We want to get into this trade. So what level would satisfy a bit of a pullback? And the answer to that is roughly around the 7,200. So we're getting a bit of a very, very small structural failure now to the upside on a minute time frame. Same with the pound. Okay, let me take these off, and we're getting sort of a pullback to a level that we're quite interested to look for opportunities to sell. So here we go. This is the kind of the erratic, sort of impulsive data. It is 1:30. I don't think we've got any significant news to be aware of. I'll just get this up on screen. No, there isn't. So so let's see. Maybe it's the economic optimism data. So it's a level of a diffusion index based on surveyed customers. Like, it doesn't really have the... So above 50 indicates optimism, below 50 indicates pessimism. So they're expecting an optimistic figure. And it's only if that figure is drastically lower than expected might that cause a little bit of a wobble in the US dollar. So yeah, we're getting strong reversals now to the upside in these markets. So maybe as a result, our attention should sort of come back to the equity space. So, and the only reason for that is we've identified our floor in the market, and it became a level of support. And you know, we can see this level in here. It was where some buyers started to come in and push prices up to these levels. And exactly the same thing is happening again, which is why we wait for that close below that level. It's actually a really important part. And we're getting quite a nice strong move after kind of a few hours of just sideways moving, apart from, you know, one significant flush lower. But we're certainly getting a strong retracement now off these lows. So we can go into each of these on smaller time frames and see what's going on. So a bit of exhaustion potentially in the S&P 500. So we generally want these markets to move back. I mean, this is quite close. What is the high of this market? Is the 71.98. We would generally like this market to push back a little bit further. So we're still getting that strong pullback. So we'd actually like for it to push just a little bit higher than these current levels. So the next flush to the downside could be the opportunity for us to get into it. We don't like this price action at all now in the euro dollar and the pound dollar, unfortunately. So now we can, a little bit of a turnaround, bit of sort of slow movement here. So not much volume to the upside, and a bit of selling is beginning to creep in. So a little touch below this previous candlestick. These are 5-minute charts. We can certainly look to get into this. Yeah, so we can get into this market now at this level. And really what we want to do, because all we're doing is trading the pullback, we want to just place it above this level. So actually there's no need, so we've mitigated risk on one trade, we've just added a second trade, and there's no real need to leave the stop loss much higher. And we've only got a 43 pip stop loss on this trade, so a very, very small amount from an exposure level. So trading the S&P is definitely one of the more affordable markets to be trading with smaller capital or smaller amounts, so worth considering. And let's see if we get into the FTSE as well. We do have the 72 sitting in here as well, so a little click lower and we'll look to sell. So we're hoping to capitalize on kind of a sell the trend trade. Just a little flush lower. Now we have the strengthening pound just potentially supporting a lower price in the FTSE market. So we should just tick slightly lower and then maybe even explode if it. Okay, this candle's going to close now any second, so maybe it's just a little bit more consolidation. For those of you that trade with us, we do have our risk size calculator, so it takes into account all the information you need to work out what size trade you should be trading, and there's an instruction guide in there for you as well, and that's obviously for our members. While we're on the topic, we're currently offering 14-day free trial to all of our live trade rooms here at the Live Trade Room, so you'll be able to trial before you potentially look to commit to us or to learn how to trade these financial markets with consistency and discipline in your approach, and understand what's going on technically, so you can navigate, you can fine-tune your decision-making skills and really adopt more of a professional approach to trading these markets, because far too often traders will adopt a very, very poor approach to these markets, and as a result, most people's experiences of trading these markets are troubled, to say the least. Very few come out on top, so the chances of the success are slim, but we would be delighted to sort of give you a really solid grounding in that. And the good news is, if you want to come and join us, then there's only a $9.99 per calendar month fee anyway if you wanted to join us, so hopefully you'll find it a very affordable experience for you. So get a really good education in trading these markets for a very, very small price point. So we hope this will work quite nicely for you all. So we're not really getting... We've got a pullback of sorts, but maybe this market is just threatening to just push a little bit higher first. We're getting some strength creeping into the pound, so we should be seeing the FTSE perhaps just take a roll over to the downside. Mind you, yesterday that normal correlation didn't apply, so it just probably means that there's a little bit more dollar weakness creeping in. So we have a directional bias. We're not looking to flip-flop. We're not looking to now buy these markets. We're looking to go with the markets and wait for those trend-related markets and not necessarily go counter-trend with this particular approach. What we're trying to do is to instill kind of a consistent approach and make sure you try to learn that first before you can sort of progress and know enough about these markets to then decide to flip-flop, but for very, very specific reasons. And that generally comes at a much and taking on more risk and things like that, and being accomplished when you're sort of navigating these markets is kind of what we try to do with our traders. So it'll be a really strong, significant learning curve for you, but hopefully a very good one and a very enjoyable one. We're all too aware of all educators out there promising people the world, and we know, and I'm sure you probably do as well, that trading is a little bit more difficult than that. We never want to pretend that it's easy. It's not. There is a lot you need to learn, and we want to be able to provide it to the market in a kind of a coherent, easy to understand way. So that's what we're looking to do, and you're very welcome to join our live trade rooms if you wish, and the link is below. We will actually be packing up this particular live trade room pretty shortly and switching across to our traders at the live trade room. So we'll just give these markets just another minute or so, and then we'll do a quick review and see if there's any other opportunities now as a result of this move. Maybe there is. And what I'm really talking about is the dollar Swiss. You know, are we getting a break above that level? Not just yet. And the dollar CAD, again, breaking above that high would be the higher probability trade, but really we're not getting that opportunity just yet. So just a little bit messy price action here, a double bottom. So really that indicates that this level here is a bit of a game changer for the pound dollar. Okay, it's on the minute time frame, but from here you'd expect this price to be ticking to the upside on the 30.73 level. So what we'll do now, we shall switch across to the live trade room because we do have our traders there. So like I said, if you would like to join us, please feel free. Please do feel free to join us through the link below in the description tab, and of course, you know, give us a thumbs up if you can, and do subscribe to a channel and click the bell function to be notified of future live trade rooms. So connect with us through our YouTube. The details are there currently up on screen, and also through our Facebook, Instagram, Twitter, and LinkedIn account. So all that's left for me to do now is to thank you as always for joining us. We're going to need to switch across to the live trade room now, where we'll continue the trading session. So from everyone here at the live trade room, take care, and we look forward to seeing you next time. We'll be back at 8 AM tomorrow morning. So from everyone here, bye for now.